Here we go. You're good.
Hi, everyone. Welcome to Taylor Morrison's home buying webinar. This is the third webinar we have conducted so far, really since right before COVID hit, and we continue to get a large response. We understand there's a lot of consumers, individuals like yourselves, that want to learn more about what the process of purchasing a home looks like, what are the gotchas, what are the interesting things about buying a home that you might not be aware of. And our goal today, while we're with you, I have a few brilliant ladies with me as well, is to walk you through what it's like to buy a home. What are the things from the mortgage and financial side, which can seem a little daunting? What are the things that you need to know, whether this is your first home, your third home, or your last home? Certainly being more in the know, knowledge is powerful, so we want to make sure that you are up to date. So we're going to go ahead and get started. We know that we have several hundred with us today. Just a little bit about me, not to bore you, we'll get on to the more important topics. I've been with Taylor Morrison going on a little over 5 years now, very focused on the marketing side, how we're talking to consumers, how we interact with individuals like yourselves to keep you informed and up to date on our product offerings, the new home construction world, and the different ways in which you can go through the shopping journey. So, you know, we're very much in the experiential lens, and we want to make sure that the experience of home buying is equal to or up to par with the product of your home. So there's lots that you're going to hear about today. So let's move on to a little bit about Taylor Morrison. We know that when you're searching for homes, you have plenty of options. Whether you've zeroed in on the area code or the street corner of where you want to live or not, typically there's more than one. If new construction is the way that you want to go, you certainly have your options, and resale is largely our largest competitor. So a little bit about Taylor Morrison. We have been around for more than a century. We are the product of several acquisitions and consolidation in the new home construction space. We are America's most trusted builder, 5 years running by Life Story Research, which is made up of anonymous feedback from shoppers and their impression of Taylor Morrison from their experience of going into our sales centers and speaking with our sales agents. We are in the business of helping people progress through life. We have homes for every stage, whether this is your first home and you're looking for a more affordable product, if you're moving up and on, if your family is growing, or if you're looking into one of our active lifestyle communities in our 55 plus, we really do have something for everyone. We build in 20 major US areas, and we are the 5th largest home builder in the nation. As I said, a product of joining lots of other home builders to make sure that we are really spanning our product type and you know, all of the MSAs that we really want to be a part of. We are inspired by our homeowners. All of the decisions that we make from a floor plan design, locations are all driven by consumer insights and what we learn from folks like you who are telling us what you're interested in and what you want to know. So let's move into a little bit about the benefits of owning a home. I'm not going to spend a lot of time here. I think if you're on this call, you understand the benefits that are relevant to you and why perhaps purchasing a home is the better decision for you or your family. We talk about the benefits of owning a home in 2 different verticals: the emotional investment, the sense of stability, this privacy, this freedom, this ability to customize and personalize your home to your liking and to your preferences. Certainly a lot easier to do when you own the space versus if you're renting. That long-term kind of commitment to being in that home allows you to take, I think, a little bit of pride in creating your own space. And certainly financial, there's a lot of things to consider if you're purchasing a home and what it does for your long-term investment strategy, and the appreciation that real estate often can provide your portfolio. We know that rents increase and have been increasing year over year for the last decade. We also know that home prices increase too, But certainly with our mortgage interest where it's at, historical lows, we know that there's a lot of financial benefits to taking that step into purchasing your own home. Not only benefits of a home in general, what are the benefits of new construction? Right now, amidst COVID, we talk a lot about the bias to cootie free. You're the first person to ever live in that home when you go new construction, which is what Taylor Morrison offers. Your home is completely personalized to your liking. All of the finishes are up for grabs. How you want your countertops to look, the way you want your backsplash to look, your flooring, the color of your paint. And you really get to personalize the space, which you could do in resale, but you're not going to get that first pristine feeling. Our floor plans have been tried and true and tested up to building codes, are likely much more efficient unless your resale home has gone through its own set of renovations and have had more efficient windows or door frames or anything put in. You're likely going to get a more efficient home. A modern architect and layout, our floor plans and our models continue to evolve based on consumer preference and insights and things that, again, our home shoppers and buyers are showing that they want. So if you're buying a home, that was built maybe 20 years ago, you might not be in the latest floor plan or open space that might be more on trend. So we think from a new home construction, right now we're seeing a little bit of a shift on how people are using spaces, and so we have the ability to adapt more quickly, clearly, than doing a wholesale renovation for a home that might have been previously owned. So what are some of the new home trends? And I'm sure most of you are well aware of all of this. COVID has brought a unique sense of what the home means and the activities that are occurring in your home today. No longer is this just a place to gather at the end of the day with your loved ones and maybe share a meal and lay your head down to rest. You're homeschooling, you're working out, you're working, you're doing everything within this home, which has brought a lot of awareness, I think, for all of us on what our current home lacks or what our current rental lacks and the things that we need to be productive employees and parents in this new world, which I think will be a permanent structural change from COVID. I don't think we're going to go back exactly to how things used to be. I think there are some things that will change in terms of how we live in our home that are likely here to stay for a long time post-COVID. So, hopefully it's not homeschooling. That's a permanent shift that I would prefer to see not be with us forever. But working out at homes, choosing how we live in our space, having a home office, those are likely structural changes that are with us for the long time. So we know that renovations and trying to make things different in an existing home can be time-consuming, expensive, and challenging unless you are, yourself a home contractor or really good with your hands or like an avid DIYer. It's a little bit harder. So new home construction does allow for some of that to come all bundled in with the price of your home. I want to talk really quickly about how people acquire homes and are searching and shopping for homes. So there's certainly an evolution, I think, when people think, oh, I'm in the market, I'm going to go buy homes, I'm going to get a realtor, the realtor's going to open up an MLS listing for me, keep me up to date as things come on the market, and go through that more traditional, long-standing way of going through this process, which is very alive and much available to everyone who's looking for that route. I'd say another silver lining to coronavirus for the new home construction industry is that we've had to fast track our digital transformation. It's been something we've long aspired to do, but because we might be a little archaic in our ways, we haven't jumped that hurdle to be a little bit more e-commerce or direct to consumer as we would have liked to. So I think the pandemic allowed us to accelerate our plans to bring our model homes to our customers while they're at home in a more virtual capacity. And we've seen since April, hundreds of thousands of individuals take virtual tours and do a 3D walkthrough of a model home. We also instituted what we call our self-guided tours. So if you've done your virtual tour, but you still can't take the plunge without physically seeing it and touching it and understanding the quality and how the rooms transition from one to the next, you can enter a home in what we call our showcase homes, which is a completed inventory home. You can enter it on your time digitally with an access code by yourself, so it's very safe. You're not exposing yourself to anyone, and take your own tour. So we've had a lot of success since we've launched this, but this is a new capability for those of you who are searching for your home. You can find homes on taylormorrison.com in the area of where you're looking to live and see which ones of our homes offer the self-guided tour and register. It's very quick and easy, and we found a lot of consumers are taking advantage of this option amid the pandemic. We've also offered other ways to chat with us as an organization. We have a chat bot. You can schedule an appointment directly with the CSM to either pick up the phone and call them, have them virtually walk you through using FaceTime or a very similar technology, so that you don't have to go through your home shopping or your home search process in the same traditional way that you may have done in the past or have heard is the only way to do that. There's no one linear way to search for your home in the traditional sense, and certainly with the digital innovation, there's no one way to do it either. We've also launched a home reservation process. So if you have done your virtual tour, you've talked to a community sales manager, you may have taken advantage of an opportunity to do a self-guided tour where you've gone into one of our homes on your own and you're ready to pull the plug. We do offer an online home reservation where you can go and secure that home for 24 hours while you take the necessary next steps to complete your pre-application and go through the qualification process with our in-home lender, which you will hear a lot about from Christy. But the whole point of this is if you're really considering buying a new home and you want the tools, Taylor Morrison has the tools to allow you to do this in the way that you want to do this. So in the way that you want to shop for a home, in the way that you want to do your research. We know that consumers today are adept researchers. You guys do it better than anyone, and you're informed. And so our philosophy is really to put as much information and be as transparent as we can around our homes, whether it be price, square footage, everything you need to know around the house is available on our website. And then we're giving you the technology and the capability to make it yours from the comfort of your own home, which really is something that's new and very innovative from our view in the space. Not every new home construction builder is going to offer you these tools and capabilities. And then we're also always there in person. If you want to come into the community and walk through the purchase and the steps to purchase your home with a sales agent, we're definitely still have that capability. But I think optionality is a beautiful thing in this, and that you can actually go through this journey in various different ways, and in ways that are more applicable to your lifestyle and your schedule. I think I have one more slide, and then I'm going to hand it over to some of the experts on the phone. Along that journey that I just talked you through, there are a team of experts at Taylor Morrison to help you through each of these steps. We know that, especially with new home construction, I think one of the biggest differences versus resale and new home construction is the to-be-built process. It can take anywhere from 6 to 10 months to build your new home to your specifications and based on municipality and permitting. It's a long journey, and you go through an emotional roller coaster of ups and downs of waiting and just being super excited for this new home, unless you buy a showcase home or one of our move-in ready homes. And then it's a very similar timeline to a traditional resale option. But as part of the to-be-built option through Taylor Morrison, you can start this journey online. You could talk to any of our internet home consultants, and they will, be happy to jump on the phone with you and talk you through options or communities or amenities. In every community, we have 1 or 2 community sales managers, and they know the ins and outs of that community and floor plans and all the offerings within it. We have professional designers that will help you pick your finishes. we're launching a program called Canvas, where in some communities we have very selected, curated packages. So if you're not someone who's good with having to choose from 20 different faucets, we have curated that through our expert designers on putting a package together that's beautiful and has great resale value. We have expert financial service advisors. Our loan consultants will help you every step of the way on the mortgage side, which, you know, been in this industry 5 years. Christy's been in it for 20 plus years. And, you know, every time I hear her talk about it, I learn something new, because it is, you know, a very involved process. And the average consumer, I think, even if you've done 10 mortgages, you know, there's always something more to learn. If you're working on building your credit so that you can make the leap into your new home, we have experts who can help you do that. And then our construction side, we have expert superintendents who they do this day in and day out, is build homes. It's why they're here, it's their passion. And every home they come at it with that attention to detail to make sure that they're delivering you a complete and move-in perfect home when your closing day comes. So with that, I'm going to turn it over to Christy. She is going to walk you through the financial side of your home purchase.
Thank you, Stephanie. I appreciate the warm introduction, and a quick thank you to everyone who was able to join our call today. A little bit about me. Stephanie was so kind to age me with my 20 plus years of mortgage experience, but the majority of my career has been with Taylor Morrison. I've been here for over 18 years. And this is where I call home. And as crazy as it sounds, mortgage financing has really become a passion for me. And the passion is really centered on being on a home buying journey with customers. And although mortgage involves refinancing of current homes, I have just really embraced new home construction and just a passion of that home buying journey. And, you know, as Stephanie mentioned, so many exciting things about purchasing a brand new home and the emotional and the financial investments. But when it's time to obtain financing, which over 80% of our customers do, it can be sometimes the scariest part along the way. So at Taylor Morrison Home Funding, we are solely focused on Taylor Morrison customers. And that really, truly allows us to speak with one voice. I mean, you will be on a journey, on your construction journey that Stephanie mentioned, anywhere from 6 to 9 months if you're doing a true to-be-built purchase. But we want to be there along that journey to help ensure that your financing is secured when your home is complete with construction. And we are an independent mortgage banker, so that allows us to truly provide that one-stop shopping with a variety of mortgage options that we can work to tailor and suit to your needs and your specific down payments and qualifications. So finding that right financing option, we believe honestly should be as important as your choice of floor plan, all those beautiful interior selections, and then the quality of construction of your home. So we want to be there to give that same love and care that Taylor Morrison commits to when you decide to purchase a home. So we'll spend a little bit of time today talking about just mortgage qualification in general and how do we get comfortable with it. You know, Stephanie mentioned, you know, it could be your first home purchase, it could be your 5th or 10th home purchase, but mortgage guidelines and qualifications are changing constantly. And, you know, again, that new home purchase is exciting, but this is kind of the daunting and scary part. And I say this tongue in cheek, but, you know, you're asked nowadays to kind of undress financially, and we want to be there to consult you through that journey and make you feel comfortable. So today, myself, along with my Aero consultant, Deandra Avalos, we are going to provide you some information that hopefully isn't too overwhelming, but can touch the surface of some super basic qualification guidelines that can help point you in that right direction to home ownership. So you may get sparked with more questions, or maybe it's going to give you clarity that you're in a great position to start looking when perhaps you didn't think you were. Or maybe you decide that, hey, you know what, I'm not ready yet, but I have the confidence that I'm a little closer than I thought to that new front door. So we'll provide you some useful tips and tools. And Deandra will spend some time in a few moments to talk to you about our qualification improvement department. We call it Aero, Able, Ready, Own. I also want to take a moment to introduce everyone to Dorothy. She is our mortgage technology platform. And again, feel free to jot down questions during the call. As Stephanie mentioned, there's hundreds of folks that have dialed in, but I just wanted to let everyone know that unfortunately, because there's so many, we won't open up for Q&A, but before we close out today, Stephanie will be sure to let you all know how you can ask those individual questions. So let's go ahead and get started and just talk about really our basics of mortgage qualification. And if you've ever Googled and researched, like, what are the important factors of qualifying for a mortgage, you'll see a lot in Google researches. They talk about the 4 C's. I personally prefer to compare loan qualification to the 4 legs of a chair. So I always think about, you know, if I was going to sit in a chair, if I was approving a loan for hundreds of thousands of dollars, can I really take that risk of having one of these legs not be strong? And nowadays, no, you can't. And those 4 C's of qualification, being collateral, cash, capacity, and credit, are the 4 things that we want to touch on today. So as a lender, we just need to understand that ability to save funds to purchase. How are you going to repay that loan back to the bank? And is your credit history strong enough to pay those debts timely? So we'll talk about each of those individually, give you some general understanding of that qualification, and then maybe help you discover where you're at on that journey to homeownership. And I'll touch quickly on the first one, and that's collateral. And the collateral is really about the value of that property that you're going to be purchasing. As the lender, we have to require that appraisal, third-party appraisal report, which is going to provide that current value, that what is that home worth today. Appraisals nowadays, I'd say, gosh, for the last probably 10 years, are completed by an unbiased third party. It's a licensed appraiser, so there can be no influence given by either the lender or the home buyer to that value. And as the lender, we just have to be sure that we're lending appropriately to the value of the home and want to make sure that the home's worth the purchase price. God forbid there was a default on that loan and the loan needed to be sold and cover those losses. So again, the other benefit as the home buyer is you want to be sure that you're protected, that you're not paying too much for a home, and that your seller has not inflated that price. So there will always be deep research done on recent comparable sales data. The appraiser is going to go out and do an on-site visit to make sure that the home size, features, and conditions are the same as your purchase agreement would state, and do those measurements, provide a report back to the lender and the borrower, and we can make a decision on your lending based on that piece of our chair, you know, to ensure that we're loaning against the guideline requirements. So the second piece, which is always, you know, curious, is the down payment. And what are the down payment requirements and how is that factored? So we have to determine that cash that's going to be needed for the down payment. There's also obviously closing costs that are going to be incurred when you're purchasing a new home. So with regard to down payment, the loan that you apply for is always going to have what we call a maximum loan to value, or LTV. And that is the ratio that is used to determine the amount necessary that you'll need to put down for that cash down payment. And that loan amount is always determined by the sales price or appraised value, whichever is less. So the example shown here, you know, shows a $300,000 purchase price with an appraised value of $310,000. If that particular loan product required a 5% down payment, it's going to be 5% of the 300, not of the 310. Essentially, you're walking into your home with $10,000 of net equity. So the next piece, my lovely host, if you could click for me, thank you, is how do we verify that cash? So we have to make sure that the guidelines that have been established on where those funds are coming from, there's certain acceptable and unacceptable sources. So some of those acceptable sources of down payment would include things like funds from your checking, savings, and money market accounts. And if you're making deposits into those bank accounts that aren't from a payroll, likely you're going to have to provide a paper trail to make sure where that source is that they came from and that that is still considered acceptable. Quite often, investment and retirement accounts are going to allow you to borrow or withdraw funds without penalties if you're purchasing a primary residence. Also, gift funds are acceptable and defined as money that could be given from your spouse, child, or another dependent, or maybe any other person who's related by blood, marriage, or adoption. You can also receive a gift from a fiance or domestic partner as well. There are certain municipalities within the nation that do have state and county down payment assistance programs, which could be available, and I would just advise checking within your local municipality for that availability and qualification, because it is very, very specific to where you're located. Another possibility is the completing of what we call a budget worksheet or savings feasibility. That's one of the beauties of new construction, is that you have that possibility of, you know, for example, a small down payment's required, but I'm going to build a home and I can show that over this 6-month time period, I can actually save it through a budget worksheet to have that final down payment when we close. So that can give you some time to save. So maybe it's not that completed inventory home Stephanie spoke about, but it gives you that buffer of time to save the down payment. And then if you are someone that owns another home that you're planning to sell and depart from, or maybe you have an investment property you want to sell, anytime it's secured funds, which would be an example of selling a home, you can absolutely utilize those funds for down payment on a new home. So the last thing that I will go through is just kind of the obvious unacceptable sources. Cash on hand, we call it mattress money sometimes, which would be, for example, cash that maybe you keep in a safe, a safety deposit box, is not acceptable because we just don't have a way to source where those funds came from. And then the other piece, which sometimes is misunderstood, is credit cards or cash advances from credit cards are not okay because they're technically considered unsecured. They're not tied to anything else with a lien, and they're considered borrowed funds, and borrowed funds cannot be used for down payment. When we go past down payment, I mentioned earlier that purchasing a home is going to have closing expenses. There's settlement fees involved as non-recurring closing costs, but then you also will have homeowners insurance and getting your real estate taxes established. So those costs, there's really no rule of thumb. Every single area or market where you're purchasing has different closing costs because some states have different transfer fees and government fees included. So they can vary, but the costs typically encumber, you know, lender fees, title fees, attorney fees, and again, those government fees and transfer taxes can vary significantly from state to state. You will have your first year of homeowners insurance at closing, and then if you do choose to set up that escrow account to pay your real estate taxes and insurance as part of your monthly payment, you do have some cash that needs to be brought to closing to set that up as well. When you're purchasing in a community that has a homeowners association, which all of our communities at Taylor Morrison do, there are sometimes startup costs and fees that relate to that community at the time that you purchase. So what I wanted to talk about here is what we call interested party contributions. Now, Taylor Morrison does offer incentives towards some of those costs if you're purchasing your home and financing with Taylor Morrison Home Funding. Taylor Morrison Home Funding also offers a lender credit when you go to loan application, and then you may have a realtor that's willing to contribute. Now, if those parties, seller, lender, realtor, or a combination of all three, are contributing, there are maximums that they can contribute, but there are many times in certain loan programs that with that mix of contributions can cover sometimes all of your non-recurring costs and maybe even dip in to help with your insurances and real estate taxes. So, you know, the allowable closing costs that can be paid are those that I mentioned. Also, in addition to that, up to a year of your homeowners association dues. And if you're receiving a loan with mortgage insurance, there's the ability to buy out of that monthly payment and just pay a portion or all of that up front, as well as you can always choose to buy down your interest rate when it's time to secure. Moving on from cash and down payment, let's talk a little bit of just about some basic qualification when it refers to employment and income, and that's that third C of capacity. So capacity is really referring to how are you going to repay the mortgage? We need to look at job stability and the likelihood of that income continuing. So it's important to note, and this is another sometimes misunderstanding, is that your mortgage approval is based on your gross income, and that's not your take home. That is the income before your federal and state taxes are taken out versus your net take home pay that we do not use for qualifying. So, you know, when you talk about job stability, we're looking typically for 2 years in a job in the same line of work. Doesn't have to be the same employer, but typically the same line of work. So, for example, let me give you an exception to this. If you're someone that's recently graduated college and you're entering your career, you can provide college transcripts and show that you're working in that line of work that you earned for your degree, and that would be perfectly fine. You may have had a gap of employment, whether it was due to a hardship or you took time off for family reasons and now you're re-entering the workforce, and that can also be considered. If you're self-employed or perhaps a contract worker who receives a 1099 at the end of the year and pays your own taxes, typically 2 years of those earnings are required. If you're someone that receives commissions, bonus, overtime, or you work a part-time second job, those again, that 2-year rule will typically apply. Perhaps you are retired or receive Social Security, disability, or some pension. That can be used as well for income qualification. If you receive distributions from an investment account, perhaps you are retired and you draw from your investments monthly. You just need to show that you have enough funds in those accounts that can generate that monthly income stream for the next 3 years. And then lastly, if you want to disclose your receipt of alimony or child support, that can also be used as income. We would ask for a divorce decree to make sure that that continuance applies for the next 3 years. But again, there's workarounds and caveats to all that we just talked about. So I'm going to pause right there, Stephanie. We're, three of our 4 legs in. So right now I'm sitting on the bar stool, which is always my happy place, but talking and touching on collateral and capacity and cash. So I'm going to turn it to Stephanie for a minute and allow her to give you all some tools which could be helpful if you're someone who owns your current home and you're seeking to sell prior to purchasing a new home with us.
Thanks, Christy, for walking us through all of that. And as she mentioned, before I turn it over to Deandra, who leads our loan qualification improvement department, Able Ready Own, thought I would just spend a few moments talking about ways in which we're finding our new homeowners coming to us, the way that they are disposing and selling of their current home. We call it a contingent buyer. This is someone who comes in wanting to buy a new home, but needs to, sell their current home as part of that transaction. So there's been lots of disruption in the space, as I mentioned, in just real estate, residential real estate altogether. There's been an emerging trend of what we call in the sector iBuyers, and these are tech companies who are heavily weighted in real estate and are very good at the disruptive side. So I'm sure some of you, all of you, have heard of Zillow. They are definitely the gorilla of the pack. They not only is it where you can find all your listings, they've got mortgage options, they've got the iBuyer suite, so you can find your new Taylor Morrison home through Zillow and sell your current home to Zillow through their iBuyer, which is called Zillow Offers. Locally here, right in our back door, OfferPad's headquartered. OfferPad also is somewhere where you can put in your address. You will get an offer for your current home in less than 24 hours without having to go through the showings or work with a realtor. Open Door is also a big one in the space. There are a few others, but these 3 tend to lead the pack in terms of, value and what they come in at, and what the ultimate experience and how it's aligned with the Taylor Morrison experience and what we offer our customers. So there's some benefits to working with an iBuyer platform versus a traditional realtor. Zillow OfferPad will work with your realtor. I think Open Door will too. If you want to, get some of the direct benefits of working through an iBuyer, but want to, stay closely aligned with your agent. They all work well together, which is wonderful. But we found a lot of traction in this space, and we definitely use it as a selling tool to help our buyers and our customers work through that process of selling their current home. I think right now we all have the benefit of being in a very hot market. A lot of our buyers have no issue selling their current home, selling it for above asking, at asking. I mean, we're really seeing tremendous success in our customers being able to sell their homes. But just wanted to provide some insight and a look behind the curtain on some other options for you, should you choose to take that route. And then I will turn it over to Deandra.
Thank you, Stephanie. So I've been in the mortgage industry myself. I'm feeling a little bit dated, but for 21 years, I've been able to find Taylor Morrison and be a part of this home for 14 of those 21 years. We started Arrow in 2011, and I've been fortunate enough to be on since the ground floor. Credit's like a thumbprint in its uniqueness. There's no two customers whose credit profiles are the same, and each one tells a story. Working with our customers, we're able to improve their credit to qualify, or even strengthen your loan application to help you secure a better interest rate at the time of locking in your loan. It's not something that we take lightly. It's something that we look forward to, and we feel kind of honored and privileged to be a part of every single day. So with that being said, let's go ahead and talk about credit and the quality of credit. Credit is likely the topic we always get the most questions on. First, when you're looking at the credit scores for a mortgage, you're going to see that it's provided by all three of the major repositories. You're going to have Equifax, TransUnion, and Experian. A lot of times you might think that you need a 700 plus score to qualify for a loan, but it isn't necessarily true. There's loan programs that allow for minimum scores of 580, but you have to remember that with the lower credit score, it indicates that you've had some late payments, some derogatory events, and it may prevent you from qualifying until your score is raised, which is where we come in. The credit scores are going to impact your rate, your mortgage insurance premiums. So let's talk a little bit more about credit and the way that you can enhance it to obtain the best financing possible. Some of the primary score factors, I guess like this little visual right here, you're going to see that 65% of your credit score is solely based on timely payments, how much you owe against how much is available to you, your credit utilization. The length of the credit you use, the new credit and the mixed type of credit types like student loans, auto loans, your mortgages, all of those contribute to your scores. Most creditors won't report a late payment to the bureaus unless it's 30 days past due, which can have a significant impact to your score. Although your score might be high enough for qualifying, it could still disqualify you until you've gone 12 to 24 months without a late payment, especially if you're late on your mortgage. It's never a good idea to take a gamble on a late payment with a creditor. Almost as important as the timely payments, you're going to want to manage your credit card balances against the limits. Lenders are looking at your ability to manage the debt that's been given to you. So as a general rule of thumb, you want to make sure to try to maintain your credit balance to not more than 30% of the limit. So if you have a $1,000 limit, you wouldn't want to carry more than a $300 balance at the time your payment is due. A lot of people don't realize that your payment due date is typically an indication of when your billing cycle is going to end. And whatever your balance is at that time is what gets reported to the bureaus, and it impacts your credit scores. Let's talk about a few more tips to managing your credit. The credit basics, a hard pull versus a soft pull. So a soft pull is going to be done at the time that you're doing your pre-qualification for your mortgage. It's usually not going to impact your scores. It's just kind of to see where everything's at. It's only pulling 2 scores with the bureaus. And then you have your hard inquiry, which is going to happen when you apply for like a credit card, an auto or student loan, and your mortgage. The inquiries remain on your credit report for 2 years unless you have perfect credit and you've never had a late payment. An inquiry itself isn't really going to have an impact to your scores. You're looking at things like late payments, your credit utilization. Those are going to have more of an impact than an inquiry itself. When you're shopping for big loans like your mortgage or your auto, you might get like an incremental ding, but the inquiry itself offsets. You have a 14 to 45-day window period to be able to shop those rates and to find a lender that's willing to qualify you or pre-qualify you for those loans. When you pre-qualify with Taylor Morrison, we initially do that soft pull. Again, it's only going to provide us with 2 of the 3 scores. And once you make the decision to purchase, then we'll move forward with the formal loan application, which would be that hard inquiry. Now, you may find that your score is different for a mortgage versus the consumer report when you receive it directly from the bureaus or by another company. There's a specific mortgage scoring model for your residential report. That median score is going to be used for the baseline of qualifying. It's not the average. It's literally going to be, if you have a 600, a 615, and a 630, it's going to take that 615 score. It's not bureau specific. If you have more than one borrower, such as a spouse joining on the mortgage, it's going to take the lower of your 2 middle scores, and that's what's going to be used to determine qualification and ultimately the interest rate. It's not unusual for one spouse to remove themselves from a mortgage loan just to kind of qualify and get that better interest rate, as it's going to benefit your whole family. We've already discussed the need to try to maintain your balances at 30% of the limit for revolving debt, but it's important to mention that you don't want to close accounts in good standing either. You're basically closing a trade line that's benefiting you moving forward, so you want to try to maintain all of your accounts as open instead of closing those out. Most of the derogatory information on your report will stay on there for about 7 years, but as those accounts continue to age, you're going to see slight incremental improvement with making the timely payments. I do want to quickly mention that income and bank balances have no impact on your score, but they are factors that are going to be used and considered in your approval and indicate your strength as far as your payment history. Now, collections themselves are tricky. There's a lot of myths on how to handle them, as well as like this imaginary window that if you talk to a collection company, it starts this imaginary clock and it restarts every time that there's contacts, which isn't true. Collections will stay on your credit report 7 years from the charge-off date of the original creditor. Now, while paying them offers no improvement to your scores, it's something that helps you in the sense that going forward, it's not going to continue to update as a derogatory item. Paying charge-offs can help you though, something with a debt that has been written off by a creditor, but they haven't sold it to a collection company yet. Public records, they'll stay on your credit for about 10 years. And any items that need to be paid in full or have a repayment agreement, that also runs into the financing part of it because it will need to be addressed as far as the qualification aspect. Disputed accounts, those items get removed from the scoring models because they have to verify the validity of that debt. They can't prove that it belongs to you. So sometimes you'll get the benefit of an increased score, even though that debt does belong to you. So in summary, to build good credit, you need to borrow what's affordable to you, don't overuse it, pay your credit cards down monthly, and don't borrow too high against those limits. It all sounds like common sense and easy to manage, but it's a lot to understand, juggle, and can be overwhelming. And that's where our Aero department comes in. We have this department that's been designated solely for qualification improvement and loan enhancement. Able, Ready, and Own offers you a personalized strategy to help enhance your credit and provide you guidance and education to get you on the right path to home ownership. It's not for those that are seeking credit improvement just to gain loan qualification, but also for those that want to improve their scores so that you get the best interest rate. It's a complimentary service. It's free to those looking to purchase as well as those that are already under contract on the Taylor Morrison home. You're not under any obligation to purchase, so we would be able to work with you prior to writing a contract so that we can get you there when it's time to, well, when you're ready to move forward. Our Arrow program, what we're going to do when we receive your enrollment from one of our loan consultants, we're going to run simulations based on that credit report with all 3 bureaus. We aren't classic credit repair, so we're not going to talk directly to your creditors, negotiate debts, and it does require your participation to be able to successfully complete our Arrow program. Some of the examples for our recommendations would be to open new accounts when you're trying to reestablish credit, to remove yourself as an authorized user. One of the things that we look at is we look at improving your scores for the least amount of money. We know what your budget is. We have you part of this whole process. So we're looking at what you have available to you, where you're going to see the most bang for your buck, and we try to get you to that targeted goal, whether it be a 620 for qualifying on a conventional loan, if it's a 640 for FHA, or if you're looking at doing jumbo financing with the 700 credit score. We're going to work with you along the way and provide you with that personalized path by suggesting either paying down revolving debt, opening up a new card, even just time. We're going to work with you through the process of when you write to when you go to close on your loan. Now, while the recommendations don't guarantee an increase in the score, we have helped over 2,300 families gain the score enhancement and achieve their dream of ownership. We can assist with updating items on credit if you've already had letters of deletion from creditors that you've been working hard, but you still haven't seen them removed. We can assist with the removal or deletion of accounts. We can assist with removing disputes if you may have used credit repair in the past and it just kind of sat there and nothing really happened. We can help you get back on track so that you can qualify and buy. We've had situations where customers come in and they want to close on an inventory home, or you decide that you want to do a to-be-built home. We'll work with you whether it's within the next 30 days or even if it's in the next year, year and a half. We've had clients enrolled for 18 months, but during those 18 months, we helped them improve their score 183 points. They were able to close on their Taylor Morrison home and achieve that dream. So what we're going to do is send out the personalized path. We're going to help your client or you along the way in regards to being able to purchase so that you can either qualify or that when you do go to lock in your rate, you can do so with peace of mind and knowing that you've done everything that you can. You're going to get the best interest rate that's available to you based on the work that you've put in. With all of that being said, I'm going to hand it back to Christine.
Thank you, Dee. I appreciate that. And you are so right. Credit is probably the one thing we certainly get the most questions on. I'm going to take just a moment. There's a lot of information on this slide. And Stephanie will let you guys know we will be sending this material out along with the recording. But now that we've kind of covered those, now we're sitting in our chair. I'm out of my bar stool now. Even though I know it's 5 o'clock somewhere, but we've covered those basic loan qualifications and given some tips on credit score enhancement. Thanks again, Dee, for doing that. But let's just take a moment to just talk about the most common loan products, including what those features and benefits would be. And one of the most common loans that we see is just your standard conventional non-government loan. And again, it is the most common mortgage product out there. You might hear about Fannie Mae or Freddie Mac. And those are the 2 main agencies that these loans are sold to. And those are the 2 agencies that determine the guidelines. And, you know, you've got your classic down payment of 20%. But within the conventional loan guidelines, you can do as little as 5% down. When you are putting less than 5% down, there will be mortgage insurance premium that is attached either monthly or upfront based on your choice. And that mortgage insurance premium, don't get that confused with homeowner's insurance. The mortgage insurance premium is there to protect the lender in case there was a default on that loan. There's a certain percentage of protection there. But in addition to that, there are conventional loans for specific first-time home buyers that require even less with only 3% down. So unless you're looking at one of the first-time homebuyer options, the conventional loan is usually a great alternative if you're someone that's looking to buy in a higher price community. But then you've got your government buckets, one being USDA, VA, and the third is FHA. And USDA loans are eligible only in select rural areas around the country, and they're phenomenal for customers that have little or no down payment. There are some caveats with area median income limits, which apply to these loans, and there is a little bit more of a strict debt to income ratio versus the VA or FHA loan. Now, the VA loan with the Veterans Administration loan is excellent loan product if you're active duty or you're a veteran military service member. There's also little or no down payment required. There's massive flexibility with higher debt to income requirements, and then typically a lower minimum credit score compared to conventional loans. And then lastly, the FHA loan, which is secured by the Federal Housing Administration, that requires as little as 3.5% down payment. And there's a really common myth that FHA is only for a first-time home buyer, but honestly, that is just not true. You can own another home and purchase and utilize an FHA loan, provided that you don't currently have an active FHA loan with no intention of selling that house that it's tied to. So you can only have one FHA loan at a time. There are loan amount restrictions, so that is based on the county of which you're purchasing. There are loan limits, but quite honestly, there is great flexibility with debt ratio. There's also lower minimum credit score requirements, kind of similar to the VA loan. And it really honestly is a great alternative for someone who's not purchasing in the USDA area, or you exceed the income limits for USDA. And FHA loans, along with the conventional loan, do allow for those gift funds from a family member as that acceptable source of down payment. So that's really important to understand. And I've mentioned this debt to income ratio a couple of times, and for those that may not be as familiar, that really just goes along with how much can you afford. So we've talked about that being a critical piece of the loan approval, because it's letting us know how much of that income is coming in and then back out to make payments. So the calculation is comparing how much you owe monthly versus how much you earn. So when we look at that pre-tax income, that gross income I spoke about earlier, we have to be certain that once you pay your new mortgage and credit obligations, all of those things Deandra talked about, you have to have money left over to pay your other expenses. And that includes your federal and state income tax, basic needs, food, clothing, childcare, utilities, got to keep the light on. So the solid rule of thumb that I always let folks know is you don't want to have your housing and credit expenses be above 40% of your monthly gross income. So you've got to leave plenty of money left over for all of the other obligations. Now, there are loan programs that allow you to go up to 50% of your income. VA loans sometimes can creep up a little higher than that, but those typically fall within that FHA and VA financing, and you want to make sure that you have good compensating factors, whether that's you have just excellent credit history, you have some cash reserves in the bank for a rainy day. But if you were just playing around with numbers and wanted to calculate your own debt to income ratio to consider with a new housing payment and your credit expenses, that housing payment includes your principal and interest on the loan that you're borrowing, homeowner's insurance monthly, real estate taxes monthly, and then if there's mortgage insurance, that monthly amount as well. We also do consider if there is a homeowners association, that monthly payment is part of quote unquote your housing payment. So you tally up your minimum monthly payments, and I always use, I learned this back in mortgage school, 20 plus years ago, as a formula of the little number divided by the big number, which is your expenses. We want lower than your high number, which is that gross income. So that would just be a quick calculation for you. Now, going through all of that and touching the surface of some of these qualification tips, maybe now you're thinking, maybe I should apply for a loan, and let's see what this looks like for me. But right now, I'm sure everyone has information overload. So with that being said, we do understand that purchasing a home is just not something that happens often in someone's lifetime. It is, like Stephanie mentioned, it's a financial and emotional commitment, and it's likely the largest purchase you will ever make in your lifetime. So we want to make sure that we have your back every single step of the way. And I want to introduce you to Dorothy. She, as I mentioned, is our state-of-the-art secure mortgage technology. She works alongside with our Taylor Morrison Home Funding loan consultants and brings you what we consider to be one of the best home financing experiences, because we're able to couple that technology and give that personal touch service. And with having the protection of industry standard encryption technology, you can also trust that our Dorothy platform, anytime, anywhere, allows for account access, secure document transfer, and real-time loan information. And this is where you would truly get started to pre-apply for a mortgage with Taylor Morrison Home Funding. So, you know, again, whether you're ready to pre-apply, you're thinking about Arrow and the services that Deandra and her team provide, or maybe you just want to talk to a mortgage professional and just spitball some ideas. You can get started by going to taylormorrison.com/home-financing. If you are interested in seeking counseling through our Arrow department, you'll always start with one of our professional loan consultants. They can start by running that initial credit simulator and get you connected with Deandra or someone on her team. That will help you then create that right path to home ownership. If you want to just jump right in and pre-apply for financing, get detail on what you qualify for, go to the Start Your Journey tab at the top of the page, select the area of interest where you want to purchase, and it's going to prompt you through some very customer-friendly, easy-to-use finance questions. Once you submit that request, we have teams of loan consultants locally, and we want to ensure that we're able to get back in touch with you as quickly as possible. I want to remind everybody that when you go through Dorothy as your start to this journey, we are only doing that soft credit inquiry before we talk to you the first time. It's not until you purchase a home that we truly need to do the hard inquiry, unless there were some marginal things that we just wanted to say, you know what, let's just go ahead and run your loan through automated underwriting with all the information and maybe get that full 3 credit bureau look. There's no reason for us to have to pull a hard inquiry. But again, we're here for general questions. If you just want to talk to somebody, you can also, and it's shown on the screen, if you just want to speak to somebody and not go through the technology platform, just email on that link, depending on your market, and that team of loan consultants will all receive that request from you, and someone will pick up the phone and call you within just a few business hours. So with that being said, you know, I'm just going to thank everybody who joined today. The mortgage content we feel is just so much of a part of that home buying journey for so many. And we hope that there was, you know, one new thing you learned or led you to some more questions. But I'm going to turn it back over to Stephanie to close out our session as we've reached the top of the next hour. And thanks so much, Stephanie.
Thank you, Christy and Deandra. We know, as Christy mentioned, this is chock full of information. We don't expect you to memorize it all. All of this information will be shared with you following the conclusion of today's session. And, you know, to be honest, the only way I really want to close this out is by telling you that this journey is an exciting one. Your home purchase should be an extremely exciting part of your life, a big milestone in your journey. And each of us at Taylor Morrison would be honored to play a role in that and to help facilitate that moment in your life. We are over communicators. We share, we reach out, we want to be part of the excitement. Here's just a quick glimpse at, you know, many of the touch points that you can expect. Each of these moments, you know, you'll be surprised and delighted, and we make it very, we make it a milestone moment each and every time. So This is a glimpse into our journey from a communication standpoint, the moments that you can expect. We call this our homeward bound journey. We bite this into little chunks and communicate what you need to know when you need to know it, so you don't feel overwhelmed. We're not going to throw this at you at day one, but this is just, again, a look behind the curtain on the steps that will lead you to your new front door. And then for joining us today, our way of saying thank you, it's one of our values, is to continual education and being informed. We give you huge kudos for taking the time to learn more about this process, helping to educate yourself so you're a more informed and aware buyer, and you can make the decisions that are right for you and your loved ones. We are extending a $500 coupon towards closing costs, and this is in addition into any current offers, and only accessible for those of you who have attended the webinar today. And we will send, as we promised, a copy of this presentation and a recording if you want to refer back to any of it. And if you do have any individual questions around your unique circumstance, or you need some guidance, or would want a place to start, regardless of the topic, please send those directly to Christy and I. We will be monitoring this inbox. communications@taylormorrison.com. No question is dumb. No question is too small. We're here to help you. And again, thank you so much for spending an hour of your day with us. Have a great Wednesday.